Hey, what's up guys? Welcome back to the channel. I think we deserve an update for what's going on in the stock market. I'm seeing a lot of people extremely surprised with the way that the market has reacted over the past 2 days. Now, there's a lot of stock specific news that has come out, but right now I want to address some of the recent trend shifts we're seeing. Now, you guys can see clearly that clean energy and high risk assets have started to perform really well. Now, if I'll be honest, I've been calling this out for the past 1 month, but a lot of people did not seem to agree with me. But it finally looks like a lot of people are entering that FOMO stage where all of a sudden we're starting to see risk assets squeeze to the upside on essentially no news. Now, you don't necessarily need good news for stocks to go up. In bear markets like this, even bad news that is not bad enough can cause stocks to go up. And that is something we're seeing right now in this market. And that's one of the signs of a stock market bottom. But it's pretty clear that many people still don't think this is the bottom of the market and whatnot. Well, in this video, I want to show you guys some important data that shows us that this might very well be the bottom. And you might as well just treat this as the bottom because that's how you win long term in this game. No matter if you're index investing or you're buying individual stocks, it doesn't matter. Dollar cost averaging during times of peak fear has always paid off. And the reality is that most of you watching this video are not going to make it in investing if you don't follow this very, very simple rule. You see, most people like to wait until there's good news to buy stocks. But history has shown us that that is always the wrong time to buy stocks, because by the time that good news is everywhere, even in individual stock picking, the price that you're paying is probably going to be way too high. You're much better off believing in your own conviction even when the price is going down and be a buyer during that time. That is historically what has worked. And otherwise, everybody else would be able to make money from the stock market, right? If it was really that easy, then everybody would be millionaires and billionaires and retiring off the stock market. But clearly only 70% of people really make money, or actually 70% of people lose money in the markets, and only around 30 to 20% on a good year actually make money. And a significantly lower percentage of those people actually beat the indices, which on average return around 8% per annum. So overall, the trend is pretty clear. As you can see right now, a lot of people are scared about this recession happening. Well, the reality is that yes, we're in a recession, but how much is that actually going to affect the valuations of stocks? You can see that earnings projections are not yet negative. And even though they are significantly down from 2021, I want you to answer this question to me. What do you expect to happen after a year of record stimulus flooded into the market? 2021 literally saw 2 stimulus check rounds go into the average consumer's hands in America of around $1,400 each. That's not even including if you have a dependent or not. And so if we have that much record spending and cash on hand for the consumer, do you really expect us to beat those numbers in 2022? I mean, it is the most dumbest assumption to make. And so even if, yes, we're in negative growth year over year, that doesn't mean you don't buy stocks. And you can see the reality is we're not even as bad of a growth decline as you've historically seen even after this record stimulus. So if you really think we're going into this recession, then this is actually the recession you want to be buying the dip in. As you can see, June of 2020 was actually significantly worse, negative 10%. 1958, negative 4%, right? 2008 was negative 2.58%. And right now, in the second quarter print, we only got negative 0.63%. So if you are scared about the depth of this recession, this data shows you should not be at all. And even if you're scared about inflation, we already showed you that the leading indicators are showing us inflation is very close to peaking because core PCE has already peaked. And when you have both of these catalysts fall into the favor of the market, and the market participants realize that both of these catalysts are near pivoting and not as bad as many people expected, then that's when you get these risk-on rallies in the market where the assets and the stocks that are sold off the most aggressively tend to outperform the rest. And this puts a lot of people and a lot of shorts and bears in disbelief and actually causes a lot of them to either cover their short positions or actually buy into the market, which is exactly what we're seeing. Now, apart from something like NKLA's shareholder approval for the proposal number 2 getting approved, which, by the way, is a very good accomplishment, so congrats. if you're a Nikola shareholder, because this really puts a big block of worry out of Nikola's way. There's really been no other major catalyst that has caused something like Nikola stock, for example, to go up. It's a lot of algorithmic trading, a short covering, and also FOMO buying, because people tend to buy stocks when they're going up and they don't like to buy stocks when they're going down. And as we all know, the real people that make money are the ones that buy stocks when they're going down and hold on to and stick on to their own conviction. And as you can see right now, even though we're expecting this negative 3% decline year over year for the S&P 500, it is nowhere near as bad as we've historically seen it, even during times of no recession, like in November of 2015, and even in December of 2012, which is when we saw the fears of this double dip recession happening. And as a matter of fact, back then, growth stocks tended to outperform every other form of asset, even though, yes, during the downturns, growth stocks always get destroyed more. But at the end of the day, right now, we're in a downturn. So you tell me, would you rather be buying growth stocks or selling growth stocks when you know that historically every downturn is followed by an upturn? And the upturn is always led up by growth stocks and unprofitable companies, which have the highest potential for growth, even if they're losing money a lot in the short term, because investors realize at that point that growth is becoming scarce, and the companies that are growing the fastest with the biggest outlook tend to outperform. And as you can see right now, one of the big signals that is showing us and verifying for us the fact that we are in this massive risk-on rally is the fact that we have just had a random stock that was just listed on the IPO from China under the ticker symbol HKD now hit the number 11 biggest market cap company in the US. Guys, this is a pretty big deal. The company is now worth more than Alibaba, and it is almost worth as much as Meta Platforms or Facebook as of today's close. And this was actually listed in Hong Kong. What this shows us right here is another signal or a lagging signal of the stock market having bottomed. We didn't see these kinds of big moves and squeezes in stocks, especially in new listings, since probably November or December of last year. Throughout 2022, we haven't seen any IPOs, or major IPOs at least, or any big risk-on rallies. And these always tend to happen when the market is in a risk-on phase. And risk-on phases always tend to lead the bottom of the market. So this is a pretty good sign that we're out of the worst of the situation, unless we have some sort of macroeconomic situation that develops over the next 3 months, which obviously might lead the market to go even lower. But as you can see, given the positioning of most equity US futures, honestly, I'm not concerned too much about that. As you can see, as of the middle of 2022, many people are just positioned completely against the market. And historically, even outside of 2008, you can see this has always provided some very good, unique opportunities to buy. And if I'm looking at the trends, typically these very oversold areas in the US equity future positionings tend to happen when there's a lot of uncertainty in the market. Right now we have Ukraine, inflation, the Fed, recession, now obviously China and Taiwan. And all these little factors have come together to create this wall of worry. And it's during those times that not only the volatility goes up, but positioning from bulls to bears skyrockets. And it's at those times when the market tends to bottom. As you can see, all these times led to a good buying opportunity. And then finally, I've been hearing a lot of people talk about this Fed pivot and waiting to buy stocks until the Fed pivots at the end of the year or in 2023 or whatever. Now, sure, historically, the Fed pivot has always acted as a good bottom signal. But the reality is that now that everybody expects that Fed pivot, what are the chances that it's actually going to be the bottom? Right? When everybody's already talking about this upcoming catalyst about the Fed pivoting, then what guarantees you that people are not going to start buying ahead of time, ahead of that catalyst, and start bidding stocks up? Because the more people are talking about it, it's simple logic, guys. The more people are talking about it, the more it's going to get priced in ahead of time. And that's the same reason why last week's earnings reports didn't tank the market, or even the CPI print, or even what the Fed did with the 75 basis point hike. The reason it didn't tank the market is because people have been talking about that for the past 6 months. And so the more people talk about it, the more people start selling ahead of time. And so the less sellers are left for the actual catalyst to take place, which is what everybody was looking forward to. So because of that, my positioning is pretty straightforward in this market. Again, I'm going to continue to buy the dip. And yes, I don't care when the Fed pivots. The Fed could pivot in 2023 or the end of this year. As long as I see most people talk about the Fed and all this drama be on the media, I think it's always a good time to buy stocks. And I think that is a big reason for why we've been seeing this risk on rally. And I hope you guys enjoyed this video. But as usual, guys, make sure to drop me a thumbs up, and I'll catch you guys in tomorrow's NKLA earnings live stream. Take care.